today's trading session and what he's expected going forward. We're joined by Chris Conway from the Australian Stock Report, who's live from our Melbourne studio. Chris, great to see you there today. Just speaking of the Fed, it was all about those moves in the overnight session. I suppose they really did what they were supposed to do. They didn't upset the market. They need to be given a bit of a pat on the back for that.
Good afternoon, Leanne and gents. Yes, look, I think Janet Yellen and the Fed took advantage of the situation, really. I heard one other analyst say it this morning, that was Chris Weston from IG, that they took advantage of what the market was giving to them. You know, remember, it was only 2 or 3 weeks ago that the expectations for a Fed rate hike were down in the 20s. It very quickly moved to circa 90% after some strong data. The Fed has always said that they'll be data dependent, but they took advantage, like I said, of what the market was giving them. And, you know, that's reinforced by the fact that the outlook hasn't changed. So I think the Fed got one away, if you will. They got a free swing and they took it. And that sort of speaks to what Rudy was talking about before. Okay, great, it's nice that we get a bit of a pop today and we're happy in the short term. But, you know, has the situation really changed? And now, you know, the focus goes back to what the Fed does longer term.
And what do you think that will mean for the market longer term? I mean, do you think this will be a catalyst for the market to continue moving higher?
Yeah, look, in the short term, I think it will, Leanne. I'm always on record as saying I'm a short-term focus, short-to medium-term focused trader. So I don't really look 12 months out. I don't really care what is going to happen 12 months out. I don't care to speculate. So I think we can continue to rise in the near term. I still would like to see 6,000 by the end of this month, so in the next couple of weeks. And everything that I laid out, you know, there is the potential for it to happen. So I've, again, been on record as saying that I thought the Fed would raise. I thought the US markets would rally post that event. We're 1 day or half a day in terms of the local session after that. And I think over the next couple of weeks we can hopefully push up to 6,000. Beyond that, I wouldn't even want to speculate where the market might head.
Okay. Let's get into some of the broader moves. We can probably talk about the Fed all day, and we no doubt will be throughout the program. But let's get into some stock-specific moves there today. Myer being one of those, and it's unfortunately one of the worst performers. I mean, we saw profits rising, but sales dropping. We know it's one of the most heavily shorted stocks on the market there. But what did you make of the result from Myer?
Terrible. The results were terrible. So they did beat on profit and they did beat on EBIT, but it seems to me from a quick analysis of the numbers that the only reason why they did that is because they cut costs. That is a finite proposition. You can only cut costs so much. Total sales were down 0.6%, and sales post-Christmas, so the January quarter, were lower as well. So I thought the numbers were terrible. In the time when I put some notes together for you for the segment today, and when I made it to the studio, I actually joined that groundswell of shorters and have shorted the stock. I don't see how Myer trades itself out of the position that it's in. You know, they've committed to spending $500 million on refurbishing stores. Some of that has already happened, hasn't really moved the needle. And we all know about the competition that is both here and coming from bigger players in the US and elsewhere. So I think it's a very tough operating environment for Myer. Whilst the profit numbers and a few other numbers were up, I think when you look a little bit deeper, they're in a bit of trouble.
They are taking a couple of initiatives, aren't they, in terms of sort of prompting Amazon's arrival. I think, you know, they've they've put in this initiative to allow customers to buy now and pay later, signing a deal with payments facilitator Afterpay, so one thing, but they're also looking at their food area, so sort of doing a similar thing to its rival David Jones and overhauling its food services. So they are trying to put in those initiatives, aren't they, to deal with not only the online space but the imminent, I guess, threat of, say, an Amazon coming to our shores.
They absolutely are, Leanne, and don't get me wrong. Look, Myer's an Australian icon. I don't wish it unwell. It's just that my job as an analyst is to look at what the picture is and make an assessment. And unfortunately, I think the situation for Myer is a poor one. So, I mean, you made a couple of points there. Yes, they're starting some new initiatives. One of the interesting things that you said even just then was that they were looking to revamp their in-store food offering, so perhaps their food courts, to catch up to David Jones, you know, something that David Jones, their direct competitor, is already doing. And again, when comparing and contrasting those poor sales numbers that Myer had, David Jones actually had positive sales growth over those 2 periods that I was talking about. So it seems like they're very far behind the 8 ball. They're spending $500 million trying to fix the problem, and that doesn't even take account for the fact that they have some very, very stiff competition coming their way. So again, like I said, I don't wish Myer unwell. I just can't see how they get themselves out of the bind that they're in.
Sure. All right, let's talk the mining stocks. Doing really well there today off the back of a bounce in iron ore. Fortescue 678. And Chris, just recently, I note from what you said through a little earlier, you've actually sold Fortescue. You may be regretting it now with the move higher again.
I am absolutely regretting it, Leanne. I took advantage of a very nice pop in the stock price yesterday and took some risk off the table ahead of the Fed, closed a couple of other positions as well. But yeah, that was unfortunate. Obviously, the stock is up another 4% today. That's what you suffer being a short-term trader. Sometimes you're going to make decisions that don't fall exactly the way that you want. But I still like Fortescue. I'm having a very close look at BlueScope as well. So stocks in that space that, you know, seemingly have rallied very hard. I think maybe there's some more room still left in them. Again, mindful that I have a shorter-term outlook rather than, let's say, a 12-month outlook.
Fantastic. Chris, we're going to leave it there. It's been great talking as always. Thanks so much for your time.
Thanks, Leanne. Cheers.
Chris Conway joining us there from the Australian Stock Report. Well,